Let's talk about what lies ahead. Sandip Sabharwal on the show with us as always. Sandip, hi, good morning. Good to have you on the show. And from when we last spoke, Sandip, another 200 point of a move. In fact, the futures left it off at 26,300. What do you make of this move on the markets?
I think if you look at institutional activity, it doesn't seem to be as great. So I think there's an element of the positive fallout of what China is doing on the global markets because after a long time, China is trying to stabilize its economy, and that's having a positive follow through on rest of the global markets. Although it can be argued that the earlier argument was that because China is not doing well, so funds are flowing into other countries. So now on the reverse side, do more funds flow into China or what happens? So I think it's a debate which is on. But uh, markets seemed overvalued even 1,000 points lower. And to that extent, the overvaluation is only increasing. Uh, The good thing is that on the speculative side, at least on small and mid cap, there seems to be some moderation. People are getting a bit scared. So if some more correction continues in that segment, then we could start getting opportunities.
Sandeep, now the Swiggy IPO as well is happening, and they filed the DRHP last evening. 3,750 crore rupee IPO, and then Hyundai as well is going to be a mega one. Do you think in the interim, though, it'll suck out liquidity a little bit and maybe call for an interim top?
Yeah, the supply has been so huge, so it's been very surprising the way the markets have been behaving. Because if you look at it on a daily basis, we see UIPs, offer for sale, sell out by some promoter or someone. And the magnitude of these offerings on a daily basis is so huge that the sustenance of the market with such huge supply also has been somewhat surprising. Now we have these mega IPOs of Hyundai and Swiggy. So Swiggy, I think the fresh issue is 3750, but overall the issue will be about 10,000 crores. Hyundai is expected to be about 15,000 crores. So supply obviously is increasing. Now the question remains that whether the inflows into the markets can suck out or sustain these supplies. But at least with this kind of supply, what we'll also see is that at least the pace of the market movement needs to moderate because eventually uh, we've seen historically also as the supply becomes larger and larger at some stage it becomes difficult for the market to absorb that.
Sandeep, yes, indeed. Stay with us.
This entire move on metals ever since the Fed rate cut, do you think this is at best a tactical move, or is there merit in looking at investing in any of these names?
I think the move started more after like the Fed rate cut obviously contributed somewhat to the move, but I think it's when the Chinese started talking about stimulus and trying to revive at least the capital markets, if not the economy, by the various measures on financing, etc., which they have done. The we've seen base metal prices move up, but steel prices continue to be subdued. Steel prices have in fact touched 4-year lows rather than moving up. So there's been some up move in base metals. However, if you look at the prices of stocks which benefit from this, like Vedanta, Hindalco, etc., they're already at 52-week highs. So the key is that a large part of this is already factored in. And the probability, I think, of the Chinese economy actually improving by whatever measures they have done, because if they pump in so much money into their own stock market and buy their own equities, obviously the equity markets move up. But does it impact the real economy or not is something we need to see next year. So I would be very suspect about the moves in most of the metal stocks.
Okay, fair enough. Stay with us. Suspect when it comes to metals, but
Sandeep, wanted to get your thoughts in as well. Where is it that you would be comfortable after the recent decline that we've seen in some of the realty names like Kunal was flagging off? Where would you put fresh money to work or maybe add on to existing positions?
I said we need to be fundamentally a bit cautious on the real estate segment because as per all the reports which are coming out for the current quarter, sales seem to be down significantly in the real estate side. And to that extent, if sales start moderating, then ultimately the pricing peaks off and we could see some moderation in pricing also going forward. And new launches, announcements, etc., are still going on strongly. So we need to be a bit cautious on real estate at this stage. I would like to look out for the quarterly results in October and see what's happening actually and what the commentary of the companies is.
Okay, a little cautious, not as exuberant as what the charts may be indicating. But what about a Maruti and an M&M and even a Tata Motors for that matter, Sandeep? Fresh, renewed vigor, even though they were still awaiting those upticks in the passenger vehicle sales at least for the festive season.
A large part of the value of Tata Motors comes from JLR, and in JLR they have indicated moderation in demand, etc. So I think so. We will leave Tata Motors for now. Maruti and M&M both are reasonably positioned on in terms of valuation, whether it's the large cap universe. They are still not at very high valuations. The challenge now is that does the festival season, upcoming wedding season, etc., lead to a significant revival in demand in four-wheelers or not? Because monsoons have been good, agri prices are strong, so there should be some rural demand revival at least. And if the RBI follows Q rate cuts of the US Fed, then that could add to sentiment. So I think there are a lot of factors driving that, combined with the fact that input prices have been moderate, so companies are able to absorb slow growth and give discounts to push sales while maintaining their margins. So I would still be positively inclined long term on Maruti M&M. But I think given the recent run up, for people who are owning these stocks, there's no reason to sell. But for those who want to buy, they could possibly wait out for there to be some consolidation or correction.
Sandeep, should one sell anything at all? Because every time you're selling, you're regretting.
Yeah, so I think you need to identify sectors which you think would have reached valuations which are completely unsustainable. So, like we got out of railway stocks when we thought the valuations were unsustainable. We got out of Tata Motors and a few stocks here and there. But I think, like I've said often, that we keep 12 to 15% as cash to take care of opportunities when they present. But we are still not in a zone which we can call it's a huge significant bubble, which when it bursts, the markets will fall 20-30%. I still don't think that's going to happen. So to that extent, I'm not looking at increasing the cash holdings right now.
Markets may not fall 10-15%. I mean, what is the thought behind it?
So the thought is that one, on pure valuation, we are still not on bubble territory. Secondly, the key parameters the biggest parameter which is required for a big top in the market to be made is that inflation is very high. And that high inflation leads central bankers to actually increase rates, and then the entire scenario becomes unsustainable. Or there is some sort of crisis in the financial system. So both these parameters seem to be missing, or at least not visible at this stage. So I think that's the reason I don't think that we will have the kind of fall which we see after a market bubble is made. But the negative factor obviously going on is the extreme speculative activity on smaller stocks like SME stocks trade at valuations which are higher than large cap stocks. Like the BSE SME index is twice the valuation of the main board small cap index, etc. So speculative activity is very high, supply is very high. So those are the negative factors which could potentially slow down the market or create some correction.
So, Sandeep, just like we spoke about defense, we can talk about shipyards, you spoke about railways, we've been maintaining a view on channel also that look, these are businesses which will continue to grow, but these are businesses where margins are not wow, and 70-80p multiples for companies where returns are 14-15%, they are not going to sustain. And stocks have gone down. Where else are you finding this kind of a misbalance where P multiples have become out of whack and the underlying business is not going to be that great which would justify stretched valuations?
The speculative activity largely was one in smaller stocks. So there'll be many small sized mid cap companies which still have very high valuations, and I think it could also be in segments like renewable energy, where if you look at the solar or solar related companies, their valuations are too high, given the fact that if you see on a daily basis, you see companies announcing capacity addition, etc. The capacity addition in the solar cell as well as panel manufacturing is going to be so huge over the next 1 or 2 years that we are going to go into an oversupply situation. So I think that excitement will get moderated eventually. So I think that's one segment which clearly comes to mind where people should be careful.
Sandeep, somehow everyone is convinced that private banks, private banks, and private banks is the only way to go in this market. And one of the reasons why private banks were underperforming is because FIs were selling. Now they've stopped selling, private banks should outperform. Do you think this trade has merit, or this is the most talked about, most crowded and the most awaited trade, which may not actually happen because markets are already pricing that in?
Yeah, at one level, markets have priced that in. At another level, what you said initially was absolutely right, because financials form such a large proportion of the indices and the benchmark indices which foreign investors follow, that if there is positive fund flow, 30% of that at least has to go into banks, and that creates the up move. And the other part also has been that most of the large banks have not been raising equity. If you see the equity issuances by if you see any large bank, be it HDFC, ICICI, Axis, SBI, etc., they have not really been raising equity also. So supply also has been limited on the financial side, and that so any fund flow goes directly into the secondary flows. So if the flows continue the way they are continuing, we could see some more uptick. Next year, if the RBI continues the same strategy which they are following of restricting liquidity or introducing the new liquidity norms, etc., next year could become a bit challenging for many of these banks in terms of pure earnings growth.
Sandeep, historically, I go back to that same point again. What you've seen, what I've learned, purely based on market cycles, that when you see excitement in the IPO market, that means we're in the last phase of the market. We've seen that with Reliance Power, the famous example of 2008. In TMT, it was those crazy internet companies which went public. Then we saw a mini peak which was made in 2021, I think 2021, 2021 when Zomato, Policy Bazaar, all of them, Paytm, when it went public, it coincided with a market top for many months now. Are we in for this market top? It could be a short-term top, but are we in for a short-term top in and around this activity of frenzy in the IPO market?
Yeah, Nikunj, the probability is very high given this huge supply and also the way the markets have done. If you look at Nifty, was up 20% last year. It's already up 20% this year. If you look at the small and mid cap indices, the returns have been twice of that. So these are clearly unsustainable moves at a time when earnings growth has not been that much. So if you look at earnings growth over the last 2 years, it has lagged behind the market growth. And we've also got so much of stock which has got added into the overall market capitalization. So it's like when things look so hunky dory, like it's not, it's really so. So I would think that there will be a correction, there will be a shakeout. It should have happened. It's not happening because of some global factor comes into support. The Fed came into support. Now the Chinese are coming to support. But eventually, I think the valuations do catch up. So people need to be cautious, keep some cash on the sidelines, etc., and then look for opportunities whenever the correction plays out.
Yeah, somehow I just want to go back to that SEBI data once again. I know it's a data which came out 2 days ago, but I just want to keep on reminding everybody about that data. We'll keep those graphics permanently ready. Whenever we want to talk, we will talk about it. Now, look at the data here. 93% of the total trades which have been done in the options market, they've not made money. And Sandip, you know, this is like a crazy number, right? Here is a vibrant bull market where SIPs are making money. If you are simply following this policy of buy and hold good quality stocks, last 3 to 4 years really have been gratifying. The whole experience of investing in equities has been so rewarding. And then there's a parallel here as to what the SEBI data is, that in the F&O market, 93% of the total trades, 93%. Now you may consider yourself mentally lucky that you are in that 7% bracket, but it rarely happens. But 93% of the folks have actually lost money. Isn't it astonishing, you know, Sandeep? A vibrant bull market, a market which is backed by SIP flows, a market which has seen stellar participation by Indian retail investors, and in the F&O market, 93% of the trades done by non-institutional investors, they've made losses.
So I think the basic thing which many people, participants in the markets or these retail investors don't realize is that F&O is a zero-sum game. If someone is making money, someone is losing money, so the net gains tend to be zero at the end. So you need to be betting on the fact that you are on the positive side of that. While when you invest, it's not a zero-sum game because the wealth actually gets created and the wealth is there to see. Like when the market capitalizations move up, when the values move up, they move up for everyone. So that's where the wealth creation happens. The unfortunate part is that I also come to touch with many of such retail traders, etc. So they are in it for excitement. So even if you try to convince them that for excitement, you go somewhere else. And here you focus on making money. People want to play with their money. So that's the psychology.
That's going to let you go on that note. Thank you so much for joining in and sharing with us your thoughts on the market. But
there comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise. There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.